Facts. Your alleged bank, servicer, or pretender lender does not have a valid right to foreclose on your property. If you purchased or refinanced your home within the last 8 to 10 years, then there exists up to an 86% chance that your loan was improperly transferred or assigned, meaning no one person or entity can foreclose upon you. More facts. Your alleged bank, servicer, or pretender lender will never admit of any wrongdoing, and they will lie and steal your property even if they have to break the law. Banks have big law firms on their side trying to clean up the mess they created. You too need to seek someone that understands the law and can protect your rights. This information is for consumers that want to find out if their mortgage was securitized without paying thousands in a securitization audit, consumers that are behind on their mortgage or can't afford to pay anymore, anyone upside down or owing more than their house is worth, or consumers in foreclosure and facing losing their home. Securitization is when your loan became packaged with thousands of other loans and sold to investors as a mortgage-backed security. A conversion took place. In order for Wall Street to legally securitize your loan as a stock certificate, your mortgage note had to be destroyed. Here's more on securitization. Your mortgage note and the stock certificate can't exist at the same time. It's called double dipping, and it's not legal. During the securitization process, your mortgage note was destroyed. During the securitization, the chain of title was broken and your mortgage loan became invalid. This means no bank, services, or orphan entity can legally offer to restructure your loan or modify it. This is the reason you have been waiting months for a modification that will never happen. You have rights, and you can take affirmative action to fight an improper foreclosure and save your home. You can legally fight foreclosure, and we can help you receive a clear and quiet title. In life, a problem is only a problem when you don't have a solution. Your solution to understand the foreclosure process, foreclosure fraud, and what you can do to save your home is right here, right now. How would you like to have a new mortgage you can afford at 80% of your property's value? You don't need credit, income, or paperwork to fill out. If we accept your case, we guarantee results. Here's an overview. Real Property Consulting is a real estate investment and consulting company, RPC. RPC purchases homes with negative equity in foreclosure or just late on payments. RPC leases the same home to the homeowner for a tryout period of 6 months and then converts the lease into a new recorded mortgage. RPC uses its resources, hedge fund, law firm, to obtain a new mortgage at 80% LTV. This creates instant equity and a 30 to 60% lower mortgage balance and payment to the homeowner. Homeowners keep control of the property at all times. After receiving the new mortgage, the homeowner can sell, rent, or live in the home. This process does not affect the promissory note between original homeowner and lender. Once new mortgage is in place, the homeowner can hire one of RPC's attorneys to file an action to cancel the promissory note and erase it from the homeowner's credit file. Remember, this original note is most likely lost or destroyed by now. Therefore, it's not enforceable. Here's the timeline. We need 48 hours after your inquiry to approve a file. If approved, paperwork will be drafted within 7 days, and the homeowner can either request a closing at their home or at one of the approved title companies. From the closing date, in which the homeowner enters into a temporary lease until the new mortgage is issued, 120 to 180 days, the homeowner must make lease payments on time, as they are the same amount as the new mortgage being offered. The homeowner can opt to pay all 6 lease payments up front and speed up the process. Qualifying homes are as follows: under acceptable, late, not late, no lis pendens, lis pendens filed over 1 year ago, any size loan. Homeowner must be able to afford new mortgage or opt for cash for keys program, and title search. Under not acceptable, lis pendens filed within a year, an offer presented to a bank for a short sale, or original lender still owns the note and mortgage. Here's the steps of the process. At closing, the homeowner agrees to sell the home to the new formed LLC using the template FARBAR as-is sell agreement and warranty deed. This will give the new LLC the power to negotiate with the lender. LLC will actually purchase the home with the negative equity and be subject to all existing mortgages. The home is sold to the LLC for today's agreed-upon value. Credit is issued for unsatisfied mortgages, and RPC either gives cash for keys at closing or issues a first right to the homeowner to purchase the new LLC that owns the home and the new mortgage. Negotiations with the lender must be complete before exercising the purchase. The cash for keys option. If the homeowner chooses to do a cash for keys, the new LLC will buy the home subject to the existing mortgages, liens, etc. The amount of cash offered to the homeowner to walk away from the home varies, but it is usually 12 months of rent for a comparable home. This cash can be used to get a fresh start. Lease property. RPC offers a 6 to 12-month lease to the homeowner. Triple net lease, homeowner is responsible for repairs since the property is still theirs. The property must have current insurance. The lease is figured at the same payment as the new mortgage payment offered to the homeowner. First, last, and security are due upon signing. Last and security will be credited to the closing statement once the LLC is transferred back to the homeowner after the tryout lease period ends. New mortgage. A new mortgage is obtained using LLC's resources, credit, assets, cash, and law firm. 80% LTV. That's 20% positive equity immediately. 8% interest only, or interest and principal payments. The term of the loan is negotiable. No prepayment penalty. You can sell or refinance the home at any time without a penalty. Here's a checklist of documents. The client intake financial analysis, the as-is FARBAR purchase agreement, the original warranty deed, consulting agreement, a 6 to 12-month payment tryout lease, the new LLC to hold the property under, the mortgage or escrow letter, and the note or escrow letter. Questions and answers. Question: what if this process doesn't work? Answer: you can purchase the LLC back at any time for $100. You will be in a better position with more offers of protection from the transactions performed by RPC. You will also have a 10-year lease option, which means the bank cannot, under Florida law, remove you from the property unless an owner-occupied buyer purchases the property for themselves. Please refer to Protecting Tenants in Foreclosure Act, 2009. Question: will this affect my credit? Answer: in the same way as a short sale or foreclosure. There may be an outstanding personal liability that can be wiped out as an additional service. Question: can the bank take the home away because of personal debt? Answer: no. The home is protected by the new LLC. Question: is there anything that can be done for the personal liability? Answer: yes, there are options. Question: do I ever lose control of my house? Answer: no. You always have the option to purchase the LLC from the beginning to the end of this process. And finally, are there any fees? There are probably close to $5,000 in legal fees, title searches, and filing fees, etc. Please keep in mind that the homeowner does not pay for these fees under this real estate transaction. The homeowner never pays a fee for anything other than rent and mortgage payments. Everything else is provided for by Real Property Consulting.